Hi everyone, Neža here, and welcome to Stock Break, where I give an in-depth analysis on public companies in under 5 minutes, breaking down their fundamentals and potential valuation. Let's dive in. Everyone, to stay ahead on all things investing, follow us on all podcast platforms. Just search for Digest and Invest. So in today's Stock Break episode, we will talk about Apple. Just a quick reminder before we start, this presentation is for educational purposes only, and it should not be taken as investment advice or recommendation to buy or sell any financial instruments. Now we can dive in. Apple is definitely one of the most recognizable brands around the world that revolutionized tech industry through their innovation of computer software, personal computers, and most importantly, smartphones. The company was founded in 1970s, and by 2011, it became world's first $1 trillion company. It is not the largest anymore, but it still has a big influence, accounting for roughly 6% of SB500 index. Despite facing intensifying competition, Apple's stock showed resilience in the past years with rare pullbacks. Since 2020 drop, it gained about 200% compared to SP500 that only gained about 75%. The last earnings report that was released in August for the third quarter exceeded market expectations with 5% revenue boost, strong EPS, and gross margins. iPad segment led the way with nearly 24% year-over-year growth, and that was due to new product launches and more first-time buyers. Services also performed well, growing about 14% year-over-year, but not everything was that positive. They saw a slight decline in their strongest iPhone segment, and also wearables didn't perform that well. Besides that, Greater China markets saw a slight contraction due to high competition from local brands in this market. The company also held a traditional event in September where they showcased new models. The key highlight was iPhone 16, which comes with better camera, enhanced display, and new A18 chip, which is Apple's step into generative AI. They also showcased new Apple Watch and AirPods. While the innovations were well received, these updates didn't offer anything groundbreaking that might drastically impact the market. If we take a look at Apple revenue segments that are presented here on this graph, we can see that iPhone remains the most important segment for the company, despite some fluctuations during the past years. There are also Mac, iPad, and wearable segments, which also showed some variability during the past years. For example, we saw a slight decline in Mac sales after pandemic, and also iPad segment saw some variability during the past few years due to longer upgrade cycles. However, it performed really well in the past quarter. Then there is also services segment, which showed robust and consistent growth over the past few years. It is presented in orange in this graph. Apple actually served 1 billion paid subscribers in the third quarter of 2024, and with that, they nearly doubled the number from 4 years ago, which really showcased how important is this segment becoming for Apple. Revenue is important, but what company retains after expenses matters too, and that is reflected in their margins. Here we have gross margin and net margin presented in one graph. First, gross margin measures profitability from core operations, which is showing the percentage of revenue left after production costs. And for Apple, gross margin increased from about 37% in 2019 to about 44% in 2024, which is indicating strong brand value and effective cost management. Net margin, on the other hand, measures overall profitability after all expenses. And for Apple, net margin increased from about 21% to 25% during the same period, which is highlighting an efficient cost management. The final metric that we're going to take a look at today is return on invested capital, or ROAC, which is measuring how efficiently is the company using their capital to generate returns. Over the past 5 years, we saw an increase in Apple's return on invested capital. It increased from about 20 in 2019 to 33 in 2024, which is reflecting a strong capital management and enhanced financial strength for the company. Now that we covered some of the fundamentals, we can take a look at valuation. We can all agree that Apple is a massive player in tech industry with their market cap exceeding $3.5 trillion, which is just incredible. But this time, the question for valuation is, can Apple continue this massive growth in the future? One of the major issues for the company lies in their iPhone segment, because iPhone still represents more than half of their total revenue. But we saw some declines in sales, and this might be a bit concerning. However, the optimism could lie in new iPhone 16 models with Apple Intelligence, which could give some boost to this part, and we could see some increase in sales. Nevertheless, even if that doesn't happen, there is still services segments that includes services like iCloud and Apple Pay, which has been gaining some momentum in the past few years. Besides that, also margins here are way higher compared to their hardware segments. Here we are talking of about 74% gross margin. So there is definitely some strength in this part. Now, according to Guru Focus, Apple is currently modestly overvalued. Also, their P ratio stands at 35 right now, which is higher than SP500 P ratio, which stands at about 30 at the moment. Still, with company having $162 billion of cash in hand and continued strong performance in both services and hardware segments, there is no denying in their financial resilience. Nevertheless, there are some risks that have to be considered, like maturing markets and increased government oversight. Besides that, they will have to work hard to keep up with artificial intelligence development. But I guess that we will hear more about that in their following earnings report that will be released on 31st of October. I hope you enjoyed this episode, and don't forget to like and share it with your friends if you found it interesting. Besides that, let me know what you think about Apple in the comments, and also let me know which company would you like to see next.